Hello, trading has closed on February 6, 2023. We always begin with our disclaimers, so let's do that. It's my trading plan for Tuesday, February 7th, 2023. Please remember I can be wrong. Any trade you make should be at your own risk. Now, I've added a link here for people who want to order my book. Now, the paper copy of my book is out of print, but you can still get an electronic version from Harriman House. Somebody emailed me. He couldn't do it, but without realizing he'd misspelled the name of the publisher, and of course the computer won't recognize it, so make certain you copy it right. Anybody can make a copying mistake. If you prefer the webinar, this is the address one should use. Okay, well, let's go over our calls. We called for the pattern with the early low, which is this, and tomorrow should have the early high. We said that if this low held, that we could have a substantial recovery of the day's drop, but if we were going to have the decline continue unabated, we should gap and promptly undercut this low, and that's what we got. And this is just a reminder of what we said. Now, tomorrow has the early high. It tends to be a bearish day, but lately, this day in the cycle hasn't been negative at all. It does tend to have an early high and a late low, but the late low recently, very often, has been over the early high, so we'll have to be aware that that might happen. MEJT said this rally wasn't the real thing, so the price would retrace, undercut this line, and that's already played out. Well, here's where I think we are. I think we're in wave 2, which hasn't completed. We've completed A and B, I believe, and then we should be in wave C of 2, and when it's over, I look for a big rally, and the golden cross is confirming that. But let's see where we are in this count. We gapped down, hit a lower low, closed over all the intraday lows. If that's maintained at tomorrow's open, that's a bullish pattern. Should lead to higher prices. Doesn't mean you'll close higher, but that's a bullish pattern. Now, of course, what counts isn't today's close, but tomorrow's open. If we gap and undercut this low early on, that whole pattern's killed, but otherwise this calls for higher prices. And while I will acknowledge there's no perfect way to count these waves, it is possible to count this as an ABC with the fibs working, and if you look at wave black C, you can count an ABC with the fibs working. So just because the count works doesn't mean some other count won't. But at least if we do drop here, you can explain it. And this low is a Fibonacci target of the prior consolidation, so I think it has a reasonable chance to hold. You won't know that till tomorrow's open. Well, tomorrow's pattern has the early high. Doesn't mean you won't gap down. The pattern has a bearish reputation, but lately a significant number of these days have trended up nonetheless. We gapped down, hit a lower low, closed over intraday lows, and if that's maintained at tomorrow's open, we should see higher prices regardless of where we close. Bears need to gap and promptly undercut the low of day to kill the call. It's a pattern with the early high, but that doesn't mean it'll be a negative day. You can count this as a completed ABC, and if that holds, I think we'll see higher prices, and that's today's call.